Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson looks at corn and soybean markets. Loren Giesler discusses brown spot in soybeans. Mike Boehlje looks at tough times in the ag sector. Aaron Berger talks about planting forages into wheat stubble. And Justin McMicken explains new hail damage research in Nebraska corn. Jeff Peterson from Heartland Farm Partners is our market analyst this week. The latest USDA crop progress report shows no change in the condition of soybeans across the country, but it does indicate improvement in corn. The agency moved 2% of the crop from good to excellent. In Nebraska, favorable weather aided the advancement of corn silking 41 points and jumped it from 8 points behind the state's 5-year average to 6 points ahead of it. We talked with Jeff Friday morning and started by asking about the shape of corn and soybeans across the state.
You know, it's been an interesting year, Jeff, but overall, so far, starting off on corn first, 73% good to excellent. That's really not too bad of a start. It is down from last year, though, that we were 76%. We look at the national average. We are above the national average. Nationally, we're setting at 69% good to excellent, so Nebraska's faring all right. Over on the bean side, just a little bit less, 72%. That compares to last year at 73%, but we're a full 10 percentage points ahead of the national average that sits at 62%.
You see there's a big difference between the eastern and western corn belt?
Yeah, there's huge differences. As we dig into those numbers a little bit closer, starting off first with Illinois on the corn side, Illinois is 55%, and it goes downhill from there. We actually see Missouri hits at 55%. And then we come in with Indiana all the way down to 50%. And the corn numbers are good compared to the soybeans.
Yeah, those soybean numbers are really quite awful, and we talked about those last week on the show. To what extent right now do you think weather is driving this market?
You know, it's still all about the weather. If we were to sum it up, it's about the weather and the fund position, but weather's definitely driving it. The market's really concerned about what the yield is going to be. And they're really kind of looking at it right now and saying, well, the eastern corn belt looks like it's going to be a little bit below average. Western corn belt, though, there could be some very good yields. As a matter of fact, Nebraska will probably have an average type year, but you take a state like Minnesota, they very well could have a record this year.
You go back maybe a month, maybe even a little bit more than that, and did something switch where the weather clicked it from going down to going back up, the market I'm talking about?
Yeah, exactly. Big change. You know, if we go back to about the 15th of June, everybody is looking for that market to go lower. And at that point, the market was really thinking rain makes grain, but the change happened. The funds at that point were short about 300,000 contracts between corn, beans, and wheat. They flipped around and they saw the conditions start dropping, and Jeff, they came in and bought 600,000 contracts. At their peak at the middle of July, they would have been about 300,000 contracts long between corn, beans, and wheat. And to put that in perspective, they purchased about 3 billion bushels worth of grain. That's a lot of grain.
That's a lot of grain. To what extent right now is demand having an effect on this market?
You know what, it's in the back of everybody's mind, but so far the focus is all on supply. There's going to be a lot of discussions about demand as we go forward, and we have to keep those in the foresight because our old crop demand has been good so far, but new crop is a little bit of a concern.
Because?
Main thing is right now those countries, as you look at them stepping in, our prices are just a little bit too high. As we look at the soybeans, we're seeing South America really continue to sell grain to our customers that normally we would be stepping in and making some sales. And then on the corn side, we're seeing some of that happen also.
Why do you think that is, that they're still getting grain from South America?
Yeah, there's a couple items going on. One of it is actually, if you look at the U.S. dollar, definitely the U.S. dollar comes into play. The other thing that's happened is that in the countries, in particular Brazil and Argentina, their currencies have dropped. And when their currencies have dropped, what that's actually done is that's actually paid their producers. They're paid in their home currencies. So if the U.S. dollar's higher and theirs lower, they're actually getting a better price than what they would normally expect. So they have been very willing sellers of grain.
A couple of big media outlets this week talked about the weakness in commodities, specifically gold and oil. When you look at oil, what effect could that have on corn and soybeans?
You know what, that's something we always have an eye on. That always gives us a headwind. Main thing is because of ethanol and the big part that it plays in our demand side. And anytime we get that weakness in the oil market, that makes this market hard to go up. It makes funds hard to get excited about buying those markets.
Give me an update on your positions for 14, 15, and 16.
Yeah, on the 14, we'd really like to be getting sold out of corn. You know, we're out, and if you haven't got out, I would recommend getting sold out on the 14. On the 15, we have a heavy book of sales on. We do think for this move, though, it's probably pulled back about enough for right now, but I would be another ready seller if the market bounced up to about $4.20 on the corn side and probably around the $10 on the bean side, and start also looking to make some new crop sales on the 16 also.
What about basis here as we start to approach that harvest season?
You know what, basis on the old crop actually is weakened as we'd expect, but as we look to the new crop, it's weakened a little bit also. But the thing I would say on basis is that there's still enough uncertainty about when this harvest is going to come about because of the lateness in planting in some areas. I think we'll see a little bit of firmness coming in on that basis as we get closer to harvest.
Next week, Frayne Olson will join us to analyze grain markets, and Mike Briggs will be with us to look at cattle markets. Last week, Nebraska Extension's Tamra Jackson-Ziems advised producers to keep scouting cornfields across the state. The update this week is that southern rust has been confirmed in the Nebraska counties of York, Greeley, and Clay. We'll put more information on southern rust on the Market Journal homepage. Meanwhile, Nebraska's soybean crop did improve slightly this week. According to the latest state ratings, 72% is listed as good to excellent, 1 point better than a week ago. 17% of the crop is setting pods, just a bit above the state's 5-year average. At last week's crop diagnostic clinic in Meade, Nebraska Extension plant pathologist Loren Giesler gave us an update on a disease farmers might be seeing in certain fields.
Well, at this time, we are seeing a little bit more brown spot in some of our fields. We've had these really heavy wet conditions, really favorable for our foliar diseases, particularly in some of those fields that we had last year that were hailed out. And then we had farmers go back into those that were in corn, maybe hailed out. They went into beans, then they're into beans this year, making a bean-on-bean scenario, which is really favorable for those foliar diseases.
Overview of what brown spot looks like?
Lower canopy disease, where we're going to see that yellowing and leaf defoliation in the bottom of the canopy. Brown spot is not a disease that we typically worry about managing. But it does say it can take up to 10% if it's severe. And this year with the conditions we have, I think this is one that varieties will vary significantly and they're not rated, but if you see it and you're at that window where you're considering that fungicide application, I think this is a year that you're going to want to look at that and really think hard about maybe making that application, if you're into that at all.
If you do if you do make the application, are you also mixing in an insecticide?
Well, it's not an IPM strategy at all. But I think the thing that we've seen, historically when we look at the data, and I'm not an entomologist, so I hate to comment too much, but the reality is when I see the higher yield hits, they're usually fungicide insecticide combinations, and I know a lot of producers and managers are doing that. If they're putting the fungicide in, they're making that trip across. Again, it's not an IPM strategy, which we'd really recommend, but it is one that a lot of guys are doing for the economics of it.
On the Market Journal website, you can find a link with more information on identifying and managing brown spot. The USDA is expecting net farm income to fall nearly 32% this year. That agency estimate from February will be updated in about a month, but is currently projected to be the lowest since 2009. As we told you last week, UNL is estimating a bigger drop for Nebraska, a reduction of 45% from a year ago. At a recent conference, we talked with Purdue University ag economist Mike Boehlje about how agricultural producers can better manage through the tougher times ahead.
Well, certainly the grain sector is encountering a unique period of time, at least compared to where it's been for the last 5 or 6 years. We see farm margins negative We are talking in Indiana about numbers that are typically about $100 to $150 an acre for covering total costs. We're still covering variable costs, but except for a farmer who's renting a lot of his land. Now, if he or she is renting a lot of land, then they're even struggling with covering their variable costs. But generally, we're underwater here in terms of our costs. The dilemma that we are concerned about is that we don't see that this problem is going to go away very rapidly. We're building up inventories. Our stocks are going up, and so price recovery is going to be pretty modest at best. Maybe, in fact, on soybeans, we're going to get further weakness in prices over the next couple, 3 years rather than a strength in prices. So that means that cost reductions are kind of the name of the game. We're going to have to figure out how to maintain productivity, in fact try to enhance productivity, but at the same time figure out how to lower those costs.
If you are talking about looking at a couple of years of this, other than cost control, what are some things that producers need to be aware of?
Well, probably the first thing they need to be really concerned about is their working capital position. Working capital is always perceived to be the first line of defense against financial stress, and that's really true. Farmers, grain farmers have, unless they made major capital expenditures in terms of machinery and land, they're in pretty strong working capital positions. But what we ask them to do is calculate what we call the burn rate on their working capital. What that means is how much will their working capital come down as a function of again, their cost structure not being reduced as rapidly as they'd like. And we expect to see farmers burn 5 to 10% of their working capital per year. And that may be over the next 2 or 3 years. So farmers have to have stronger working capital positions than they have. They need to worry at all as well about how to do whatever they can to protect their margins with pricing, although that's not going to be very easy these days. So it's kind of working capital and cost control are the critical things. May end up having to have a conversation with their lender and restructure debt, get a longer repayment capacity and longer repayment terms on those debts. So some pretty tough decisions.
What type of protection can your insurance programs offer you during these times?
Well, hopefully we've signed up for crop insurance, and that's kind of already done, but we need to recognize that crop insurance, the way it's structured, isn't a particularly good long-term risk management strategy, because what happens is that it adjusts to the market. And so if we continue to have low prices, your crop insurance indemnity is going to continue to be lower than you'd like, et cetera. No doubt about it, we have to have any kind of casualty and other kind of insurance we can have. Some people buy up on insurance in terms of hail and other types of insurance, and so this may be a time when we just can't take very much risk, and we need to pay a little bit more for some of our protection on the insurance side.
I want to close out talking about land prices. We know that cash rents are still expensive. We know that land as a whole is very expensive. For producers that are paying a lot for those cash rents, how do you recommend they look at what they made this year at the end of the year and think about what they're able to pay or what they should pay next year?
It's a really, really important question, probably the toughest question we're going to get, and they're going to have this next year. Should I abandon that piece of land, or should I continue to pay those premium rents? Because we don't think rents are going to come down very fast. We take what we call an options approach to this. We figure out what a fair rent is for the property, and then we say, okay, I know I can't rent it at that price, so the question is, how much premium should I pay? And the amount of premium I should pay, or the option I should pay, depends on how quickly I think this recovery is going to occur. If we're going to have a 4, 5, or 6 year period of time before we're going to get back to those positive margins, I maybe need to say, I better just walk away from it. We don't want to lose that land if we can keep it, because when things recover, we want to still be able to farm it, right? So we may have to pay a little bit of option and know we're going to lose money for a period of time to hold on to that piece of property. But we have to be very careful we don't overpay that option, and that depends upon the speed of recovery. If we're going to get a recovery to more positive margins in a couple, 3 years, we can pay a higher option. If we're going to not get a recovery very fast, we can't pay as much option. But the key issue is to be more rational about that premium we're paying, rather than to say, well, the market says this, I got to pay it, I can't ever give it up. Whoops, at some point, you might give up this piece of property, which doesn't fit very well with your operation anyway, and find that you get to rent to this piece of property, which is only 2 miles away rather than 30 miles away. So you ought to think about the alternatives rather than just say, I can't give it up under any circumstances.
Regarding cash rents, UNL Extension is holding a series of landlord-tenant workshops in August. We'll have more on those meetings in our August 7th episode of Market Journal. The July Nebraska farmer says raising 2 cow-calf herds, along with certified organic white and yellow popcorn, edible beans, and cover crops, makes business very labor-intensive for Jerry and Cindy Glazer near Spalding. This month's magazine says good employees might be hard to come by these days, but the Glazers have found high-quality workers in some unconventional places. You can check out July's Nebraska Farmer to learn more about some of these employees and the unique values each brings to the family farming operation. The state's farmers made a strong advancement harvesting their winter wheat crop in the past week. The 62% completion is now ahead of last year's pace and Nebraska's 5-year average. We recently talked with Nebraska Extension educator Aaron Berger, who said that open ground could be a good opportunity for farmers and ranchers looking for additional forages.
Yeah, so as we think about harvest is going on in Nebraska with wheat right now, and we've had a lot of good moisture. In fact, there's probably moisture in the profile. There's an opportunity to go back and plant that to a summer crop. We not to traditionally like we think a summer annual, but a spring annual. And most of the time we think about planting spring annuals in that March, April time period. But if we go something like a spring triticale or oats or barley, that planted late July through early to mid-August can produce quite a bit of fall forage for us. And the day length is shortening, and so that forage is kind of in a hurry, so to speak, to get up. It's pretty leafy. And we'll have some good quality grazing if we plant that by the 1st of August, by the 1st of October. And then we've really got some different options there for us. And we can either graze that directly, we can put it up as hay or chop it for silage, or we can leave it standing and just utilize it as winter feed. And so it's an interesting opportunity, I think, one we don't often think about. The other nice option is that spring annuals are going to go ahead and winter kill. Then if we want to go back into that ground next spring with maybe a corn crop, we're going into a seed bed there that's already prepared from a not having to go out and do much of a weed control type standpoint like we would if we planted a winter annual.
How do you decide, if you haven't had much experience with it, or if you have but you've used specifically one, how do you decide which forage you should go with?
I think any of those 3 are really good options depending on what you have available. So in my mind, really, it probably comes down to seed cost and what's available to you locally. The spring triticale, the oats, the barley, all of those are good options. And also, we don't necessarily have to go with a forage type. We can go with a grain type. Again, because of the day length shortening, that tends to trigger those even grain type forages or grain type of those forages to go ahead and be a little more leafy than if we were going to be planting them in the spring.
How much production should you expect?
I think it's reasonable to expect around 1.5 tons all the way up to 4 tons, depending on soil fertility and available moisture that we get from the time of planting until we harvest it.
And the nutrient value?
Yeah, so that's really the interesting thing to me. We can grow some pretty high quality forage here in this fall time period with these spring annuals. And depending on when we go out and graze it or harvest it, if we let it go to that late boot, early head stage, it's going to be in the mid-teens in terms of protein and in the mid-60s, even upper 60s from a TDN standpoint. If we go ahead and just kind of let it freeze out there, if we get it before it's really fully headed, it'll hold its quality through the winter. And we had some trials we did here at the High Plains Ag Lab at Sydney where we just left it standing, planted in early August, left it standing till the following March. Early March, it was still 10% crude protein, around 60 TDN. So that's the real interesting, I think, thing about these spring annuals is the opportunity to hold their quality through the fall and into the winter.
We'll link to more resources on planting forages into wheat stubble on the Market Journal website, including a webinar from Aaron that further explains the practice. Earlier this year, we told you how Nebraska Extension agronomist Roger Elmore and other Extension personnel monitored corn plants after hail events in 2014. Roger explained that bacteria invaded plants that otherwise may have survived with growing points below ground. At last week's crop production clinic, we saw how UNL staff, including graduate student Justin McMicken, are now manually hailing corn in order to learn more about what could happen after plants suffer damage.
We're looking at early season hail damage in corn. And so basically anything before V6, really when the growing point comes above the ground, is considered okay for hail. So if we get hail damage during that period, if there's not stand loss in the field, if we're not killing off plants, likely that field's okay. And so the research we're conducting that's behind me is basically we're taking a simulated hail machine out and we're blowing down corn, and then we're monitoring its response over time, 7 and 14 days, using a video evaluation. Now, what we're also doing is we're piggybacking some research that Dr. Elmore's done the previous year, which is they went around to 14 locations within Nebraska and other states that were hailed naturally. And so they tracked individual plants through as far as their response over time, and then took tasseling notes and silking notes and the yield potential of those plants. And what we found is that not all plants are equal when it comes to hail. So depending on the level of damage, we may see a different response as far as that plant's productivity.
And that's what you're trying to isolate?
That's what we're trying to isolate. So we've taken this simulated hail machine, which is as close as we can get to the real event, and we're applying it to V3, V4 corn, which should be okay. And then we're tracking that response over time, as well as the yield potential at the end of the season. So this is a massive study. It's going to be 19,300 plants evaluated when we're done. We don't know if we'll take them all to yield, but it'll certainly give us a clearer picture as far as, okay, stand loss is one part of the equation. What about the actual damage of the remaining plants that are in the field?
Are you assessing right away or a few days after?
Yeah, so we don't want to assess plants right away, and that's the toughest thing for a grower, I think, is he gets hail in his field and, you know, time is ticking. It's May. He's got to get back in that field if he's going to replant as soon as possible. Every day that goes by is a yield loss for him in his eyes if he's going to replant. And so really, you know, 7 days is kind of the minimum. And what we've done today as part of this event is kind of show people the period over time. You know, we've got 7 days since we hailed, we've got 21 days since we've hailed. And so it gives them a chance to see, okay, if we make a decision, what might that decision look like? And in fact, today, even regardless of the extreme amount of damage that we have out there, there's no replant decision needed. You know, we dropped from a 32,000 plants per acre to sometimes 19 to 20,000. That's still not enough for replant. That's only, you know, 15 to 18% yield loss on those plants. So.
You mentioned what Roger Elmore was doing based off of last year's hail damage, specifically in Ewing. One of the components of that was disease. Are you also looking at that in these studies?
We do. So that's the third component to our field study is Goss's wilt, you know, which is a bacterial pathogen that commonly shows up in cornfields, especially if they've had hail damage or any kind of sand blowing damage, anything that wounds those plants and exposes them to a bacterial pathogen that could get in. And we're going out and we're hailing, and then we're immediately applying that bacterial pathogen to the top, just using a sprayer. And that, if we waited any period of time at all, those plants would start to heal up. And in fact, we'd have a hard time getting disease. And if you walk through the plots behind me, you'll see some have a lot of damage and others don't. And really that might be attributed to the environmental conditions that follow our study. And so the last one we've done here we did in the evening, and that's more realistic to a hail event. And so likely if we're going to see damage, it's going to be far greater in that one. Cool conditions all night long gives that bacteria time to establish.
Now with this week's weather forecast, here's Nebraska Extension state climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Last week we talked about the possibility that Nebraska would lie at the intersection between some very cool air to our north and some warm air to our south, and that the models were indicating that the cold front would basically hang up for a couple days before finally sliding through. Indeed, that's what happened. However, it came about a day later than was originally forecasted. Therefore, the warm-up that was supposed to begin at midweek really started to begin in earnest in western Nebraska on Thursday. And we've seen all of the state experience very warm, humid conditions yesterday. Now we are going to see a little bit of relief as we go forward. We're still going to be dealing with temperatures primarily in the upper 80s to the low 90s for a good substantial portion of this week. But as we get into the midweek period, once again, the models are advertising a cool down. Now we have been seeing pockets of dryness starting to materialize the last couple of weeks for those areas that have missed out on the scattered thunderstorm activity. And the area of particular interest at this point in time is portions of south central and central Nebraska. And if we fail to receive significant moisture over this next 7 to 10 day period, I would expect that we will see an expansion of abnormally dry conditions to cover a substantial portion of central into eastern Nebraska. So do we have rainfall in our forecast? Let's get to the upper air models and see what we can expect. We do have a trough coming in from the Pacific Northwest with a ridge over the center part of the country, and there's a piece of energy that has been moved through that was a result of the thunderstorm activity that we've seen yesterday across the state, and we could see some more regeneration of shower activity this morning, and then once again as we get into this evening, as this vortex in the mid layers of the atmosphere passes toward the north and to the east. Now as we go into tomorrow, what we will notice is that ridge pretty much stays fairly stationary, so we're going to have another piece of energy that's going to shoot out of the western United States, and that will make its way into western Nebraska and probably skirt portions of northern and eastern Nebraska with just an isolated shower or thunderstorm expected during the afternoon hours. Now as we go into Monday, we will start to see this trough making its push toward the state. There is some discrepancies in the model in terms of the timing of the surface cold front that will push through the state. Depending on which model you look at, it could be late Monday all the way through late Tuesday, but irregardless, we should see some thunderstorm activity develop in advance of this pretty aggressive upper air trough that will move across the plains regions to our north, and that will generate thunderstorms in the western panhandle, and some of those may make it into central Nebraska. It looks to be fairly isolated in nature. As we get into Tuesday, it looks like we may see a more substantial precipitation, particularly across western and northern Nebraska, as the core energy now lays across the Dakotas. Toward the southeast, we'll probably have to wait maybe all the way into Wednesday morning before we get complete passage of this frontal boundary as this trough itself moves toward the Great Lakes and starts to weaken out. So we will see our cool down on Wednesday, probably looking at a 10-degree cool down, temperatures back down into low to mid 80s. And then as we get into Thursday, as we see this trough pass, we'll start to see the ridge trying to build back in, and that'll allow energy coming from the Pacific Northwest to move on the Gulf moisture and some monsoon moisture. So we once again will see a chance of isolated thunderstorm activity. And then on Friday, we see the same similar pattern as another piece of energy shoots down into our region. So continued chances for scattered thunderstorm activity on Friday. If we look at the temperature forecast, we will stay warm this weekend with a slow cool down in the middle of the week. Daily chances of thunderstorm activity. The best shot will be on Tuesday and Wednesday. And as we look at the 8 to 14-day forecast for next week, the following Tuesday, we are looking at normal conditions in terms of temperatures and an increase in moisture across the southern and central plains.
Thanks, Al. Today's interviews are available on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, soybean diseases, the ag economy, planting forages into wheat stubble, and hail damage research in corn. As always, you can follow Market Journal during the week on Facebook, Instagram, and Twitter. Next week, Mike Briggs will look at cattle markets, Frayne Olson will analyze grain markets, and we'll learn about long-term research using no-till in northeast Nebraska. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
No matter how you look at it, animal agriculture helps Nebraska's economy. The livestock industry provides increased tax revenues for schools and community services. Livestock enterprises also create jobs while contributing to existing businesses such as local banks and grocery stores. A thriving livestock industry helps maintain our current way of life, but also provides opportunities for the next generation of farm families. The Nebraska Soybean Checkoff helps to raise awareness of the importance of animal agriculture to Nebraska.